Assalamu alaikum, it's Tahmid here for another episode of Tahmid Talks. Today, once again, like I did a few years ago in 2021, people still are watching that video. I wanted to talk about halal investments for Canadians. And you can think of this video as an update, 4-year later update to that original video. I'll link it somewhere in here as well. And if you know something about the Canadian economy, the economy here has a lot of regulations, the markets are relatively small, everything moves a little slow. So in 4 years, not too much have changed, but still I want to give you an update as people who are looking into halal investing or halal investments, particularly related to the stock market, and are based in Canada or interested in Canadian opportunities. And similar to the past, in my initial video in 2021, a lot of the options that will be coming up today are indeed American or US listed funds. And because there are these processes and there's some degree of professional management, not much, because these are what's called ETFs, exchange traded funds, so they kind of mimic the stock market or preset basket of stocks, but they do have a small MER, management expense ratio. So if by this point I've lost you and you don't know what exchange traded funds are or what MER, management expense ratios are, please do watch some of my earlier videos. I have a whole series called Money Talks where I talk about all these issues and get people up to date on the basics of investing, stock market investing particularly. And that's why I actually started this channel. Money Talks was my first series. I wouldn't get on the camera. I just record these audio clips and post them up to the channel. So please first educate on yourself on the very basic mechanisms of how these things work before you put your hard-earned money to work. And on that note, this is not financial advice. This is just meant to be entertaining and to some aspect educational and to guide you and make you aware of the options out there if you are looking for halal investments. So with that in mind, let's get right into the first halal stock market fund that we have access to. It's the first accredited Canadian Sharia-compliant fund, WSHR. It's the Wealthsimple Shariah Fund. And once again, the ticker is WSHR. And I'll pull up the holdings on the screen. One of the first things I want to look at in a fund is the holdings. So what companies are in here, and as you can see, it's very much diversified in terms of regions, although it's very USA heavy, and there's a lot of focus on consumer goods and tech companies, which will happen naturally with Sharia-compliant funds because tech companies take on less debt than a lot of other type of companies. So a lot of big name consumer and tech companies you will recognize on this list and how they're spread out. And one of the things I want to point out, somebody commented on my 2021 video, and it's true that since these are a lot of companies that are from the USA, and if you know about USA, a lot of these companies like Coca-Cola may be on the boycott list for BDS and for anti-Palestinian activities. So it's something to keep in mind. But this is a huge pitfall of dealing with American markets and American companies which dominate the global stock markets by size. A lot of the action is on the New York Stock Exchange, the Dow, NASDAQ, and Dow Jones, NASDAQ, and S&P 500, as you know. And this won't change until Muslims have reliable and large institutional alternatives, companies and funds of our own that we can invest into. And there's some movement to get this started at a small scale. I've seen some groups in the UK and such, but there's a lot more work that needs to be done, particularly in Canada. And for giving you this access and service, Wealthsimple and WSHR, the fund will charge you 0.50% MER annually, which means, let's say your portfolio is worth $1,000, they will take a $50 management fee every year. And it's always important to know MERs because this is exchange traded fund. It just tracks the exchange. There's not too many people in suits, sitting at a computer all day managing your money and moving it around. The expense ratios are relatively low. If you go to a main mainstream banks, sometimes for their mutual funds, they charge 2.5%, which is 4 times this fee, and it's quite crazy. And just for the record, I'm not paid or I don't endorse any of these companies. In fact, I don't directly use any of the products we're talking about today, although I know close family and friends who are on these products and have relatively good experiences themselves. So once again, I'm not getting paid to endorse these or talk about them at all. They're just opportunities you should look into, and like any good investor, you should keep your eyes open. Always keep doing research and analysis. Personally, for me, I do what's called stock picking, and I pick stocks, very old school, buy and hold investments. I buy a good company at a good price, and I try to hold a stock for a very long time in hopes of its profits and revenues going up, and then in return the stock price also going up with time. That's my own strategy, and it gives me a lot of control over my portfolio and my picks, but at the same time it's very difficult because not only do you have market risk, you also have company specific risk, because there's only so many companies in a market that will win and prosper over time and become big companies, hence giving you a good return on your investment. So coming back to WSHR and Wealthsimple, if you use a company or service other than Wealthsimple, you can easily search up the ticker and buy this fund and dollar cost average or lump sum, whatever you need to, and get started. And if you're new, once again, I highly recommend educating yourself on investments in the stock market first before jumping right in head first. So with that said, there is another way. Well, the direct way to get access is Wealthsimple has an app. It's called Wealthsimple Invest, where you can get the app. It's a very simple survey. It assesses your risk tolerance, so how risky of an investor you might be, and you can adjust it later. And I've gone through this process with a lot of friends. They'll always ask me about risk tolerance and what number they should put. Anyways, for young people my age and similar, we can afford to take on more risk because we have more time in the market if we, inshallah, live a long, normal lifespan, hopefully healthy. So we can take more risk, and Wealthsimple gives you this survey. It asks you what your risk tolerance is, and when you pick the halal portfolio, they'll basically just put your money through the app. Wealthsimple Invest into WSHR, but if you pick slightly lower than the maximum risk tolerance of 10, I believe, what you will do, let's say 6 or 7 risk, it will allocate some of the portion of the money to WSHR, the portfolio, and some of it to gold and non-interest bearing cash. And what having gold and that cash on hand does is it reduces your exposure to stocks, which are more volatile, so they jump around more day to day. So having that gold and cash exposure kind of reduces the volatility, because people who are lower risk, they don't want high volatility. It really freaks them out about markets jumping up and down and seeing the green and red on your portfolio every day. So the other new option that's popped up for halal investing is Manzil, and Manzil is more trying to be a full financial firm with different services such as halal wills, halal real estate exposure, and maybe even some community development fund. You can check out their website for more detail. The community fund looks pretty interesting, but it only seems they have one project and it's still relatively small. But I'm really interested in their equity or stock market fund, which is, if I compare it to WSHR and the Wealthsimple products, Manzil is still a much smaller player, and because of that, and they partnered actually to launch this fund, the equity fund by Manzil, with OneVest, another platform management company. And I see, I'm going to pull up the prospectus or fund fact sheets here, and it shows the MER is quite high, in my opinion, of 1.16%. And as you can see, once again, heavy exposure to the US stock market, very heavy exposure to tech sector, particularly Apple and Nvidia, which would have given them quite nice returns in the past year. But once again, very new fund, very new history, very tech heavy, very USA heavy. And the other big category, as a lot of these halal fund end up being as consumer goods, the stores such as Costco, as you can see in the holdings. So this is something to note and understand where your money is being allocated to in these halal funds and how much you're paying for the service. But yeah, just at a precursory look, the superior product to me at least seems to be the Wealthsimple product because of the lower management expense ratio and the fact that you don't have to invest a minimum amount, which seems to be $1,000 for this Manzil Equity Fund. However, the real estate investment fund that Manzil has looks interesting. I think they just pool money to help people get halal mortgages, but I'm not an expert on real estate or real estate funds. You can contact Manzil and study the website to learn more about what the returns or the risk of their real estate fund may be. So it's good to see there are, Muslim-run competitors that are, as Manzil says, and I'll show you, that are Shariah-compliant by EOFI, which is an international body with the far-reach, big Sharia council of scholars and whatnot. So it's great that these Canadian firms are growing and offering their own product, even though the products are so small scale right now. And Manzil, similar to Wealthsimple, as I was saying earlier, gives you the option to download their app. And they're really, for the equity app, as far as I know, they're a robo-advisor. So, it's really easy. You get an app, and it's almost algorithmic, computer-run. You maybe do a survey with your risk tolerance, and it allocates your money accordingly to this halal funds or a mixture of halal funds and gold and other holdings like cash. And it moves it around if you change your risk tolerance or tell them something else based on your scenario. This whole industry popped up recently and it's called robo-advisor if you want to research it more. But as I was saying earlier, in the case of being a robo-advisor and the equity fund by Manzil, 1.16% management expense ratio is a little steep. And if you know how compounding works, if you pay the fee every year and you hold this fund, let's say 20-30 years, inshallah, these fees really add up and eat into your portfolio return. And the other big thing is a lot of these halal funds, their returns in recent times look quite good on paper. The reason is they hold a lot of US big tech companies by default, and these big tech companies have been having a dream run in terms of stock market return. They've been rallying, going up in price for several years now, quite rapidly. So it makes the return by default of these halal funds look good for now. If there was let's say a big tech downturn similar to the dot-com bubble 2.0, then these returns could change. And that's just another way to say that, past returns is not indicative of future returns. So that's why there's all these things in investing. And once again, you can watch my other series of money talks. You can study this online. There's all these things in investing about diversifying, managing risk, managing volatility that you kind of need to understand before putting your money to work somewhere. Alright, now coming back to my favorite topic, stock market equity, halal funds. The last two funds I want to tell you about are both run by Wahid. You have HLAL ticker, HLAL, and UMMA, UMMA. So those two tickers both run by Wahid, and I'll pull up very quickly a comparison chart on the screen between the two funds. And as you can see, HLAL is the USA Sharia ETF exchange traded fund, whereas UMMA is the Dow Jones Islamic World one, and they're both focused on large cap, meaning very large market cap companies. And they both have a relatively low expense ratio comparative competitive with WSHR at 0.5 and 0.65%, both issued by Wahid, of course, and they've only been running for a few years, with the UMMA fund being newer and having less assets under management, as you can imagine. Once again, very recent innovations in products, and as I may have mentioned earlier, the halal market is a very small market. It's growing, and it's a good option to have for those of you that follow these guidelines and ethical and moral principles. And once again, to be fully transparent, as you can see in the holdings for HLAL, it's American run, and we got the Buy Canada movement going on right now, and the Canadian dollar is kind of weak compared to the US dollar, so you will lose some, let's say, when you convert your CAD to USD. So it's a risky move, but once again, HLAL, like the other funds we've been talking about, are very American market heavy, very tech heavy. Once again, a lot of the large holdings have participated in questionable activities such as Meta, Google, and Microsoft in regards to the Palestinian cause and supporting certain Rouge and Val states. Something to be wary of, just to be fully transparent. It's important to think about where your money is going and where it's being invested as we talk about these different opportunities. And honestly, personally, out of the two funds by Wahed, the more recent, smaller fund of UMMA, I find it more interesting. It gives you good global exposure to large cap companies, which you otherwise may not be able to buy because they're probably trading on the Swiss exchange, which neither you or I have access to. So UMMA is a great way to get exposure to global picks. It's got a lot of big names, some pharma, some tech, some just consumer facing companies. And once again, MER for UMMA at 0.65% is still relatively low. And it's not easy always as Canadians or Americans to get this much global exposure in a fund, so something to think about. And personally, as I was saying earlier, with HLAL being so American, US centric, personally, I've been divesting a lot of my American holdings for other global players, and UMMA Fund gives you access in the top holdings to some of these interesting global players in different sectors such as pharma and tech. So with that note, I know it's a lot. There is a lot to consider when doing halal investing. I hope this video was somewhat entertaining and educational too, in helping you get a slightly better understanding of what makes a fund or a stock market investment halal, how these funds work, and once again, the more knowledge you have, the more you'll be able to take advantage of opportunities, investing opportunities in the stock market. And if you want to learn more, I have lots of finance-related content and other content on this channel, so please do check it out. Hit the thumbs up, like and subscribe as always. I'll see you in the next one.